Hello, my fellow investors, and welcome back to another fundamental analysis video. Guys, I wanted to cover today the two companies that we were going to cover on the live stream when it came to the earnings. However, guys, Mike was busy and I didn't want to do the live stream by myself. So I just decided, you know what, let's make it a video. And yes, we're going to cover the two companies, Bank of America and United Health Group today. And let's take a look at their fundamentals because it's very, very interesting what happened today. Pretty much a complete 180 to what happened with Wells Fargo and JP Morgan, at least on the banking side. And when it came to UNH, wow, I'm telling you, fundamentals do matter. And if you had a chance to buy this thing back at $480, well, guess what, guys? You're probably up a whole lot right now. So before we get started, guys, make sure to like, subscribe, comment. Really does help out with the algorithm on YouTube as well as Rumble. Make sure to follow us next at Fatal Investing. And if you'd like to join the Discord, the link is in the description below. Now, I'm going to have the timestamps for Bank of America, which is going to be first, and then UNH, so you guys can hop around whenever you want. Now, with that said, guys, let's get started with this analysis. All right, guys, so let's get started with Bank of America. And you guys can see I do have a little co-host right here. Now, Bank of America has had quite an interesting day, right? Very, very nice green day. In fact, if we take a look at this, we can see that on the one day, this thing gained 5.35%. Basically, Bank of America was the only reason why the XLF sector was up. Yeah, a bunch of companies, all the banks that lost, even Wells Fargo that lost like 7% last week, gained a lot today. Now, not enough to erase the losses, but it still gained a decent amount. It did rebound. But what caused this specifically? Well, let's take a look at this article over here, which pretty much kind of says it all, right? Bank of America Q2 earnings top consensus on strong sales and trading. So you got Bank of America Q2 earnings beat Wall Street expectations as sales and trading revenue growth bolstered the bank's global market unit. Bank of America stock gained 2.6% on Tuesday market trading. Quote, our global markets business delivered its ninth consecutive quarter of year-over-year and revenue growth in sales, trading, and earning double-digit returns, said the CEO. The bank expects Q4 net interest income to rise, right? To rise to $14.5 billion, according to the company's earnings slides. That compares to the visible alpha consensus of 14.4. So if you guys remember, Wells Fargo, the reason why they fell was essentially because of net interest income not changing. So if we take a look at this article, which I also have pulled up right here, this was from last week, as you guys could see, July 12th. You guys could see is the exact same reason. We got over here, Wells Fargo dropped 5.7% on Friday pre-market trading as the bank failed to change its 2024 guidance for net interest income. There you guys have it, right? And that resulted in the stock to fall 5.7. However, in Bank of America, because their overall net interest income is expected to rise to 14.5 billion, versus the consensus of the visible alpha consensus of 14.4. There you go. That gives it enough of a reason for the stock to rise a lot. So let's jump into these earnings review. Again, I'm not going to go over the full earnings. I will leave that in the description below. But let's take a look at this. We got revenue of 25.4, or actually, sorry. We got over here the EPS gap of 83 cents, beats by only 3 cents. However, the revenue of 25.4 billion beats by $200 million. And we can see over here that this is a 0.8 year over year. Revenue of net interest expenses of 25.4 billion increased 0.2 billion or 1%, reflecting a higher asset management and investment banking fees, as well as sales and trading revenue and lower net interest income. Provision for credit losses of 1.5 billion versus the 1.1 billion in second quarter of 2023 and 1.3 billion in the first quarter of 2024. I do want to take a look very quickly at their earnings report because, well, we want to take a look at, share repurchases or dividends and even that of the CEO's comments. So we got over here, guys, returned 5.4 billions to shareholders, 1.9 billion through common stock dividends and 3.5 billion in share repurchases. Gotta love it. And book value per common share rose 7% to $34.39, and the tangible rose by 9% to $25.37. Return on average common shareholder equity ratio of 10%. Return on average tangible common shareholder equity ROTCE of 13.6%. Now, looking at what the CEO said, Quote, our team produced another strong quarter serving a growth client base. The strength and earning powers of our leading consumer banking business is complemented by the growth and profitability of our global markets, global banking, and wealth management businesses. Our global markets business delivered its ninth consecutive quarter of year-over-year revenue growth in sales and tradings, earning double-digit returns. Our investments in this business are delivering for our shareholders. All right, everybody. So let's just jump into the calculator. We got the ticker for BAC, market cap of $345 billion with a current PE of 15.24. Now, this is after the massive rise today with the current share price of $44.13. Now, I know we took a look at the graph. However, let's take a look at this one more time because in the 1 year, this is up 50%. If you bought this thing at around last year, July 15th, July 16th, you are up a whopping 15%. And not to mention, guys, that last year, this was as low as $25, $25.17. Absolutely massive. Again, at the current share price, you essentially just lost 50%, well, actually 100% value essentially, because, you know, it's 25%, $25 total. So yeah, it's basically 100%, almost, or close to almost 100% gain in the past or since lowest point, right? So that right there is absolutely crazy. So on the year to date, 31.07%, still really, really good. 52-week low of $24.96 to a high, as you guys saw today, $44.40. So let's come back over here and we can see that they do pay out a dividend, which we read in the earnings report, of 96 cents. And this dividend ends up being, guys, 2.29%. At around 25 bucks, this was a lot more, right? This was a whole lot more. So hopefully you guys bought it at this point, honestly. This is a payout ratio of 32.53, a 5-year CAGR of almost 10%, 9.86, and the dividend growth is 10 consecutive years. Even if during COVID, guys, if we take a look at this on the 5-year, during COVID, they never even cut it. They kept it the same. You guys could see 2020, they kept it the same, and they played it smart. They only increased it in September 2021 to not lose it. But they have had very consistent, look at this on the 10-year, very consistent increases overall, all except for 2007, 2008, which can't really blame them for that now, can I? Right? But, and also they did have a stock split here as well. But as it stands, guys, honestly, Warren Buffett really likes this company. I believe Bank of America is one of his biggest holdings, if I'm not mistaken. Now, unfortunately, their ex-dividend date passed as of June 7th, and their payout date was June 28th, and they do pay their dividends quarterly. And taking a look at back over here, we can see that based off the current shares outstanding, they pay out nearly $7.6 billion in dividends every single year. So now let's take a look at the fundamentals. Starting, of course, with the net income on the 10 years, guys. This is going back to $5.52 billion to today of $25 billion. That is an increase of 353.41%. And, well, we can see that 4 years ago during COVID, it was when this actually went down. But they did recover. However, you guys can see that as of 3 years ago, it is actually steadily declining. I'm going to have to say, guys, I'm going to have to give this like a 60%. I get that it's good, but it's not a consistent increase enough for me to fall in love with this. It really, really isn't. Now, taking a look at next, the total revenue. We got 10 years ago of $83.62 billion to 1 year or today of $93.359 billion. That is an increase of 12%. And we can see that overall, it has been very flat all in all. It's not necessarily too massive of a gain, right? The biggest drop here was, of course, during COVID, but aside from that, it's been flat. So I'm gonna have to give this a solid 70% overall. Now, the shares outstanding. This is where banks, they just don't stop buying back shares. They really, really don't. And, well, we can see here that on the 10-year, they are, 10 years ago, they were at 10.5 billion shares. And right now, today, guys, they are 7.86 billion shares. That is a buyback of 25.19%. And from the previous year to the current year is another buyback of 1.27%. Now, the reason why I love this decrease on the year-over-year one is because this trend line is very, very close to that of these graphs. So most likely this will continue in the next 10 years. all in all, I really do like this graph. And yeah, this is an easy 100%. Even though it's not 100% in the sense that they just don't always buy back, right? You can see that they did increase it 8 to 7 years ago. All in all, they're still really solid. Now, assets and liabilities, this is also looking really good too. Not consistently increasing, but it is heading upwards. And we can see here that the average total assets of $2.6 trillion and that liabilities of $2.36 trillion is a difference of $269.5 billion. I'm going to have to give this a pretty good, guys, 95%. It is really good assets and liabilities. And if we take a look at the overall grade, we can see that this is a 78%. So it is really good. Honestly, the biggest issue here would just be really the net income, not really moving much. But aside from that, it's not really too bad, right? It's not really, it's one of the biggest 4 banks in the United States. If Bank of America were to fail, we would have the same issues as if JP Morgan were to also fall, right? So 78%, guys, is fine. You guys could see that I think that they're going to survive no matter what. They're one of the banks that when regional banks fail, they're going to be gobbling them up. So yeah, that's just my 2 cents when it comes to that. So now let's take a look at the actual valuation. Because again, when it comes to banks, you have to use book value and tangible book value per share. And well, guess what? You had a chance to buy this thing within book value a few months ago. Not so much today. So when it comes to a book value perspective, guys, we just saw it in the earnings report that it's $34.39. You guys can see right here, that is the current year to date, right? Or the current year. And when it comes to the tangible one, it is $25.37. We saw what the 52-week low was. It was under this $25. And even last year, a year ago, it was around this, roughly the same. So there really wasn't that much difference from a year ago, right? $24.60 to what the price was a year ago. So yeah, you did have a chance to buy this thing very near that 52-week low, or sorry, very near this this tangible book value, right? So if you did pounce on that, let me know, because that's really good. However, today things are a little bit different. If we take a look at this, yeah, it's no longer the case. It's still pretty, I guess you could say, decent value when it comes to the book one. We got 1.28 as a ratio, and the tangible one is 25.37. So yeah, if you guys bought this thing a year ago around $25 or even sub $25, if you did that one's really great. But if not, around $25, you essentially sniped it. You guys are up a lot. So I'm curious to see if you guys did pounce on this when this fell. If you just said, you know what, it's Bank of America, it's not going to go away anywhere, I think it'll be fine. And if you did, not only are you getting a pretty good dividend, the stock was, you know, fairly cheap, $30, so, or $25, so $100 buys you 4 shares. That's a lot of shares that you could buy with like $2,000. So tell me if you guys actually did that. As it currently stands, though, it's looking all right, but it's getting very close to bad valuation. I mean, I would actually argue it's already bad valuation in regards to the tangible book value. On the book value one, it's still okay, but you had a better shot. So tell me what you guys did when it came to Bank of America a year ago, or even just a few months ago. And if we take a look at this dividend, we can see that, yeah, putting in $6,215, this nets you 140.83 shares, which is $135.20, guys, annual in dividends. Now, I'm very curious. If I were to change this, share price to, let's just say $25.50, what would that new dividend be? Let's take a look at that really quickly. Wow. $234 essentially. Did you, and that's just assuming that's like the average of around like $25.50. That's a lot of money, guys. That's a lot of money. So I really am curious if any of you actually did that, because if you did, wow, you are making bank right now. No pun intended. But that pretty much does it when it comes to Bank of America. Again, it's interesting because everything that we saw bad when it, not necessarily bad, but well, I guess bad when it comes to Wells Fargo. Okay with JP Morgan. Bank of America just said, hold my beer. I'm going to fix everything, because Yeah, they essentially just fixed it. Like, it's absolutely crazy. Now, not the only company that had earnings today. There was one more. And well, that is none other than one of my favorite companies. It's a company that I've encouraged people to I don't want to say I've been telling people to buy, but it's one that I've encouraged myself to buy. And honestly, I really wish I would have bought more when it was sub 500. Unfortunately, I didn't. But yeah, regardless, that is the company, guys. I mean, I've talked about this one, right? I've talked about how this one's just absolutely fake. Seriously, their fundamentals are fake. It looks stupidly fake. Like, it's just insane. If you guys have not seen their fundamentals, wait until you see it. Because they are real. And then again, they look fake, which I love it. And you'll see, if you guys haven't seen this yet, you'll see exactly what I mean in just 1 second. Because here is the headline of the day when it comes to United Health. United Health hit 7-month high after Q2 beat. This was crazy today. United Health shares reached the highest level since December on Tuesday, marking its biggest intraday gain for the year. After the managed care giant beat Wall Street forecast with its Q2 2024 results. With United Health being in the industry's bellwether in the earnings season, its managed care peers are also on the rise. Notable gainers include Humana, Cigna, CVS Health, Centene, Clover Health, and Alignment Healthcare. However, Minnetonka, Minnesota-based United Health, I'm sorry for anybody who lives there, indicated a rise in medical costs during the quarter as it continues to grapple with the aftermath of the cyber attack. Oh, that's right, they did have a cyber attack which caused them to fall. On its Change Healthcare division in February, the company raised its full-year forecast attributed to cyber attack impact to $1.90 through $2.05 from its previous $1.15 to $1.35, citing business disruptions, an increase in direct response costs, and costs related to financial assistance and consumer notifications. United Health said it's provided $9 billion in advance funding and interest-free loans to support care providers as it restored most Change Healthcare services affected by the attack. However, UNH kept its adjusted full-year earnings outlook between $27.50 to $28 compared to the $27.69 per share in the consensus, even as it raised the cyber attack related business disruption impact by 30 cents to 60 cents through 70 cents per share. If we take a look a little bit further, though, we can see, however, UNH top line expanded 7% year over year to $98.9 billion, meeting Wall Street expectations as its insurance business, United Healthcare, and its health service arm, Optum, added $73.9 billion and $62.9 billion in revenue, respectively, with 5% or approximately 5% year over year and 12% year over year growth. Guys, I mean, I don't know what else to say, right? I don't know what else to say. This company, the healthcare, the insurance companies in general, they literally print money. And this is why I really wanted to get into them. And I did manage to start a position. I'll show you guys how many shares I have of UNH. It's not a lot, but I really am happy that I did start a position when it came to United Healthcare because there's a lot of money. Believe me, there's a lot of money to be had in healthcare sector. It really is. I mean, the fact that everybody's forced, well, not forced, but the fact that whenever you automatically go into an employer, you get healthcare. In fact, that's why people go to their jobs. Yes, because, work and money and all that stuff, but it's mainly because of the healthcare costs. It's so stupidly expensive that's the reason why. So it's an industry that is so flushed with money because it's so dependent. It's because since everybody depends on it to live, right? You'd be crazy to be out there without health insurance, right? Because you never know. So it's like you're leaving money on the table if you would choose not to buy into not just UNH, but any healthcare kind of insurance company. At least it's just the way that I feel. So let's take a look at this earnings because United Health beats bottom line estimates updates fiscal 2024 outlook. We get over here, This non-GAAP EPS of $6.80 beats by 17 cents, revenue of $98.9 billion, up a whopping 6.4%. That was with the cyber attack, guys. That was with the effects of the cyber attack. They're recovering from it, but that's still up 6.4% year over year, which is in line. Cash flows from operations from the second quarter of 2024 were $6.7 billion, or 1.5 times net income. And if we take a look at the outlook, the company updated its full year 2024 net earnings outlook to $15.95 to $16.40 per share to reflect the classification to held for sale of its remaining South America operations and estimated Change Healthcare cyber attack impacts. The company completed the sale of its large Brazilian operations in the first quarter of 2024. The company affirmed adjusted net earnings outlook of $27.50 to $28 per share, established at its November 2023 investor conference versus the consensus of $27.69. So let's jump right into the calculator. We got the ticker for UNH, market cap of $505.2 billion, a PE of 33.49, which is massive. However, guys, the current share price now is $548.87. If we take a look at this, my goodness, this is near 52-week high. This is near 52-week high. But the beautiful part about this is that we were just near 52-week lows a few months ago. I love this. On the 1 year, this is up 13.3%. On the year to date, this is up 4.25%, guys. Look at this 52-week low, $436.38. Yeah, you had the chance to buy this within the 52 weeks, under $440. Now, when you're wondering, well, this was 52 weeks. It could have been last year. No, it actually wasn't. This thing hit low, or sub $440, April 12th, 2024. April 12th, 2024, 3 months ago. This is absolutely bonkers, man. I was screaming at the top of my lungs when this thing was out. I'm just like, UNH is down. Oh my goodness, it's sub 440. It's amazing. It's amazing. And right now, it's near 52-week highs, gaining 6.5% today. Mike was going to short this. He can speak for himself, right? On Thursday, hopefully, if we do have the live stream on Thursday, guys, he did not short it. He sat on his hands. Boy, did he dodge a bullet. Man, did he dodge a bullet. I told you, don't mess with UNH. Do not mess with UNH. He would have been out so much money if he would have shorted this thing. Absolutely crazy. 6.5% just today alone. So let's come back over here. We can see that they do pay the dividend of $8.40, which is a current yield of 1.63%. A payout ratio, guys, this payout ratio, 29.18%. A 5-year CAGR of 15.41. 14 consecutive years of dividend payment. Ex-dividend date passed as of June 17th. Payout date was June 25th, and they pay their dividends quarterly. Again, I'm not a fan of sniping ex-dividend dates. I like sniping valuation. And you had a chance to snipe valuation. Very, very nice. So I really am curious if you guys did that. I kind of did. I'm going to show you guys what I have when it comes to UNH. I think I still only have like 1 share, honestly. It's either 1 or 2 shares. I did not do a lot. And based off of the current shares outstanding and this $8.40 in dividends, guys, they pay out $7.7 billion or $7.73 billion in dividends every single year. Take their 10-year average free cash flow, they're left with roughly the same, right? $7.623 billion. However, last year's free cash flow, $17.9 billion, essentially $18 billion. That is insane. That is insane. Especially after you see these fundamentals. These payout ratios are perfect. I really like them. 30% for the last year's free cash flow, that's perfection. And the 10-year average is 50%, guys. The reason why I love this is because, again, the fundamentals, the graphs, they are so perfect. I love it. So let's move into that right now. All right, guys, so we can pretty much go through this very, very quickly because, well, it's all going to be 100%. Almost everything's going to be 100%. We got the net income 10 years ago of, I know you guys can't see that, but it says $5.62 billion to 1 year ago of $22.4 billion, increase of nearly 300%. The beauty about this graph is the trend line, hitting those graphs every single time. I love it. This is what I'm talking about, that this thing looks fake. 100%, really, really easy. Looking now into the cash flow, the exact same graph, I swear, is the exact same graph. Now, all of it is increasing. As you guys can see right here, there's a slight decrease. But man, this is still look good. We got 10 years ago of $6.53 billion, 1 year ago of $25.7 billion, increase of 294% with an average of $15.35 billion, guys. Easy, 95%. I mean, it doesn't have a perfection like the net income. It's still really, really good. Looking now into the revenue. Yeah. Yeah. $130.5 billion to 1 year ago of $371.6 billion, increase of 184%. Just like the net income, hits it every single time. Once again, 100%. Looking now at the assets as a reference only and the liabilities as a reference only, the assets minus the liabilities is looking exactly the same as the other profit metrics. It really is. It's crazy. Consistently increasing. Average total assets of $181.7 billion with the liabilities of $117.24 billion and a difference of $64.5 billion, guys. Easy, 100% once again. Now, the cash flow minus the liabilities, this is the one that really fails, right? They're packing on a ton of liabilities, consistently decreasing. Unfortunately, as of 1 year ago, they're at negative $149 billion. The average is negative $94.88 billion. This is the only zero that this thing is getting, right? It's the only zero that this thing is getting. Now, shares outstanding is also looking really, really solid. We can see here 954 million shares. Yeah, 954 million with an M. You guys can see right there. To today of 920 million shares. A buyback of a little bit more than 3.5%. And previous to the current share, 0.43. Now, it's not a consistent buyback. You guys can see that they did increase this 8 to 7 years ago. So I'm actually going to change this number to around like a 95%. It's still a nice buyback though. And I wouldn't be surprised if they started to just not issue at all because the valuation's a little bit much right now. Well, they might consider it a little bit much. For me, it might be. We'll see what the calculator says. But perfect shares outstanding. And lastly, when it comes to the cash equivalents, they currently hold $28.4 billion with an average of $16.2 billion. Overall grade, 88%, guys. I love this. I love this. I love this. The fact that the profit metrics are 100, 95, 100. The fact that those trend lines hit those graphs every single time. They look fake. I love it when it looks fake. I really, really do. So, yeah, I love this company. Cash cow. Absolutely love it. Buying back shares, yeah, that's just, it really, there's nothing else to say. There really is nothing else to say. So let's take a look at what valuation you should pay for this, because after a 6.5% increase, some of you may not want to buy this anymore. So let's get this. Now, not adjusting for debt, guys, we got $754.70, and then adjusting for debt, roughly the same, $736.43. Let's input some numbers. Now, let's start off with the shares outstanding. I think that's fairly simple. 0.35% on average year over year. Let's say roughly the same. Let's say 0.25. Oh, sorry. Oh, no, sorry. 1 second. So let's say 0.25 over here. So 0.25. Let's say 0.5%. By the way, that's 0.25. My bad. Sorry about that. It's other way. There we go. And then let's say an increase of 0.5, right, to 0.5. And then let's just say another 0.25 increase. So what is that? 0.75%. All in all. So let's just make that into that so that way you guys can see it. Perfect. And now the revenue. The good thing about this revenue is that because it's so consistent, I can pretty much just say 11% for the median, 10% for the lowest, and 12% for the highest, guys. Yeah, $2,491. Now, the recovery rate of return, right? We can't forget that. So, recovery rate of return, it's UNH. It's a big conglomerate. It's a cash cow. I'm gonna have to say, guys, I want 15%. I want 15%. I want to do more than just beat the market. So 15%, guys, we get $332.26 to $400. And then adjusting for debt, $313 to $380.40. Margin safety of 5, 10, 15, $266 to $361.38. Now, full stop. A lot of you might say, wait a minute, it never hit 400. Right. It hit 440. For me, that's good enough. For me, at that point, I would have just started buying at that point. Slowly but surely, if it fell further, I would have just kept buying more and more and more. Now, if I had the means to do it. So I'm going to show you guys right now my holdings when it comes to UNH. If we come over here, this is my spreadsheet. Right here I have AVGO, but if we come over here and, or let's just change this to UNH, we can see that I only hold one share. I really only just bought one share at an average share price of 495. Again, guys, I have a child on the way. There's a bunch of stuff that I'm kind of taking care of. UNH was just one of those that I just didn't buy, right? Unfortunately, I did miss the boat on this one. But if you guys didn't, let me know, right? Let me know, because you guys are making bank right now. You guys are really are if you did buy this. So again, not financial advice. Every investment is the present value of all future cash flow. You guys put in 12%, by the way. Yeah, this would make it in line, right? Even right now, this will still make it in line right here, basically within the median and high assumption. It really just depends up to you. That's why, again, guys, every investment is the present value of all future cash flow. Do not listen to what I'm saying. Make your own observations, make your own determinations by yourselves. That's why the 5-year calculator is available for you guys to have for free. The link is in the description below. And if we take a look at this dividend with $6,215, this nets you guys $95. So yeah, it's not a company that you buy because it has massive yield. It's a company you buy because the fundamentals are just so good. They really are. They're just so good. Like, they're just so good. So tell me if you guys did buy this company at that sub 500. Right? That was amazing. That really was amazing if you guys bought that there. So yeah. All in all, guys, that pretty much does it for this video. I know, rather long, but I did cover 2 companies and their earnings. So yeah, I really wish I would have done the live stream, but Mike was busy. And again, I'm not gonna say as to why he was busy for, but he was busy. So I don't want to do the live stream by myself. It'll be really boring. I don't want to do it. If it's something that I'm already prepared to do by myself, it's different. But for something I'm planning to do with somebody else, it's not the same. So hopefully we will live stream on Thursday for the Netflix earnings. And yeah, we'll see what happens with that. But anyways, guys, that pretty much does it for this video. Make sure to like, subscribe, comment. Really does help with the algorithm on YouTube as well. So make sure to follow us on Next Step Investing. And if you like, join our Discord. The link is in the description below. So with that said, guys, peace out, and we will see you all next time.